morning, everyone. Welcome back to the channel. We have the Honest Company today. Hey, but this video is for you. WRS-TRX. Let's do a quick rundown. Okay, so $442 million market cap, $3.98. Let's see what's going on. Let's see what's going on with this company. Since their IPO, stock has done nothing but crash. Looks like all-time lows in 2023, $1.24. They haven't really recovered much. Right off the bat, the first thing I like to do is see if there's any insider buying. I like to look at the institutional ownership because you got to remember, insiders always have more information than us. They know more about the company than us. Looks like 15% of the insiders. So that's a pretty big number. So 15% of the insiders own shares. It is heavily shorted. This company is heavily shorted. 14% of the shares are sold short. A lot of the analysts are rating it market perform. So nothing crazy. The stock's just been flat. And there is no insider buying. A bunch of insider sells. Institutional ownership is going down. It's actually almost at the same levels as it was in 2024. I don't think there's a lot of excitement with this company right now. It's definitely off the radar for Wall Street. I mean, no one's really talking about it. I'll do an overall fundamental analysis first. We'll start with the annual. All right, so 2019 IPO. Looks like total revenue stayed stagnant from 2020 to 2022. It just hovered around 300 million. We're finally seeing a pickup in 2023 and into the present day. Looks like they returned to expansion in 2023. They must have some new products. Yeah, we'll get back to that. Looks like 2024 they have record total revenue. This is the best year that they've ever posted, and looks like 2025 is going to be already on the way to become better than 2024. So that's looking good. Top line is looking good. Let's go down real quick, take a look at profitability. Okay, so from 2019 to 2024, they've struggled to capture positive net income. It looks like 2025 will be the first year positive net income. So this is going to be really good. But we will have to wait for third and fourth quarter. So the trend is good. The trend is good. They are on their way to posting positive net income. Moving from steep losses, they are finally breaking even. They have cut a lot of costs. Some of that improvement is because they are also doing cost cuts from operating expenses. So from there, let's go ahead and pull up the quarterly data, see how they're doing on the micro. So now total revenue top line, 8 consecutive quarters of total top line revenue growth. The most recent quarter, 93.5 million versus 93 million. I mean, that's only up 0.5%. So nothing crazy. It's actually flat, but growth is still growth, 8 consecutive quarters. So they posted really great earnings per share. I mean, you could honestly see the improvements they're already posting. They posted 0.03 in earnings per share on the most recent quarter versus negative 0.04. That is up 175% year over year. And the previous quarter before that, up 400% year over year. These are actually some good numbers in earnings per share. Actually, some good numbers. Profit margins have been increasing. They improved 2 basis points from 38 to 40%, so that looks good. So, by the way, guys, they have 3 growth drivers that they talked about in the earnings report. Okay, the first one is brand maximization. Second is margin enhancement, which you could see is improvement right here. And then the third is operating discipline. Remember, when we take a look at operating expenses on the annual, they were cutting costs to help the business overall. All right, so it looks like they are refocusing on core product categories, mainly their diapers, which we'll go over in a sec, sharpening pricing and marketing, and trimming unprofitable items. Okay, so first off, so real quick, go to free cash flow per share and cash flow from operations. I think this is where the stock is getting held back. I don't think we're going to see anything too exciting with this stock price. In the near term, unless we see a little short squeeze. There's been some weird stuff happening with a lot of stocks that are being shorted. They're all moving in similar ways. Until we see improvements in free cash flow per share that's consistent, that's showing year-over-year growth, I don't think we're going to see anything crazy with the stock price yet. As of right now in the near term, I'm not too convinced yet. So one of the core products that they push is their diapers, Honest Diapers. So this is where a bulk of their revenue comes from. It's going to be diapers. They have the wipes, Clean Conscious wipes, and also the baby personal care items and all that. But these 2 categories alone consist of 65% of their sales. 65% of their sales just on 2 items. That's kind of crazy. So currently right now, the Honest Company is the #1 diaper at Target. Let's see what else. Balance sheet. So they have, okay, so good cash. They have $72 million in cash. And no long-term debt. No long-term debt. Okay, so that's good. That's a good sign. $72 million in cash, no long-term debt. They're making around $400 million in revenue while the company is currently selling at 442 million. So the price sales ratio for this company is only at a 1x, which would label this company a little bit undervalued. When you go down to the PE ratio, it is super high, $70. That is because the net income has been negative, barely above break even. But other than that, it looks like the company is just it's currently still in limbo. I would say wait till third and fourth quarter, see if there's any improvements on this top line. Right now, it's just been pretty flat. I also want to see a lot of improvements from the statement cash flows. So free cash flow per share and cash flow from operations, we want to start seeing some green. We want to start seeing some improvements year over year before jumping into stock. Also, we want to see better profitability. I'm still waiting. Again, the institutional ownership is going down. I would also wait to see until we see some insiders start buying some shares or also some stock repurchases, but that hasn't been announced yet, so nothing crazy there yet. It is highly shorted. They are in a much stronger position. They have $73 million in cash and no debt. Let's see if they can maintain these profit margins in the next couple quarters. If they can maintain the 40% profit margins, that's going to be a good sign. And if they could achieve continuous net income profitability on the bottom line. As of right now, the trend is pretty favorable for this company. The Honest Company today is fundamentally stronger than it was 3 to 5 years ago. Revenues are an all-time high, margins are an all-time high. The balance sheet is sound, there's no long-term debt, and looks like the new organization hires are focused on improving this company. As of right now, just for me, I would stay on the sidelines for now until I start seeing some improvements that I was talking about earlier. Just a quick little rundown on the Honest Company. Nothing crazy. Let me know what you guys think. Are you buying the Honest Company? Thanks for watching this video, and we'll see you on the next one.